Cities are offering price cuts and sweetened deals to attract home buyers, and the effort comes a month after the country's top leadership promised to give local governments more room to set property policies.
Abandoned shopping malls, empty apartment buildings, and construction sites that are mostly deserted. All of these things show that China's real estate market is in horrible trouble. It shows how drastically things have changed in the field in the last few years. People who bought homes are afraid that they won't get the house they paid for. You may have seen pictures from China showing a lot of building going on if you've been following the news, but if you look more closely, you'll see something strange. No one is working on these buildings. That's because China's real estate market is a mess right now, which is hurting their whole economy. How bad is it? Well, the IMF says that the number of new home projects is more than 60% less than it was before the pandemic. Home prices are going down quickly, and sales of new homes have been going down for a year straight. The Chinese people don't like this because a lot of their money and wealth is locked up in real estate. Most people in China own their homes, while only about 65% of people in the U.S. do. When so much money is tied to real estate and house prices drop, it makes it hard for people in China. People have less money to spend, so companies are making less money. The CSI 300 measure shows that all businesses are having a hard time. The question is, what is going on in China right now? Is there any chance that their economy will get better soon? You need to look back at what happened in China's economy over the last few decades to really understand what's going on there now. One of the biggest trends is people moving to cities. Since the middle of the 1990s, more and more people have been moving to towns from the country. This change caused a huge increase in building in cities. In China, many people made it a big goal to own their own home. This increased the demand for private properties, both as places to live and as investments. In fact, property holds about 70% of Chinese households' wealth. Some people would save for decades and even join forces with other families to get enough money for a down payment on a house. Because people wanted homes so badly, builders quickly began to test the limits of what they could do. But this turned into something some might call a Ponzi scheme. A Ponzi scam is probably something you've heard of. It's when you tell investors they'll get a lot of money back, but all you do is use the money from new investors to pay off the old ones. As soon as people see the results, they want to join, but they don't know that their money will only be used to pay the last investors. This loop will keep going until it stops. Plans like these are like time bombs that will go off at some point, but they can work in a world where there are always new buyers, even though they're very sketchy and against the law. In China, this is pretty much how real estate growth has been done, especially when it comes to pre-sale homes. It works like this. In China, builders sell homes before they're even begun. There isn't even a house yet when someone buys one. They put down a deposit and start paying their mortgage right away. Doesn't it sound crazy? But that's how things are over there. In fact, these deposits and pre-sales brought in about 34.5% of producers' money in 2020. This is where things get tricky. The pre-sale money isn't used to build the houses that people paid for. It's instead used to finish homes that were sold last year, moving up the ladder. Then builders make plans for new apartment buildings, start pre-sales again, get more buyers to sign up with big payments, and use the extra money to pay for the old projects. A Chinese expert just recently said that most of these things can happen when the economy is growing quickly and steadily. Things start to look a lot like a Ponzi plan when the economy gets bad. As soon as new money stops coming in, building stops. In the same way that a Ponzi plan only works when there is always new demand and nothing gets in the way of these projects. This is where the big problems in China's real estate market began. In 2020, the Chinese government saw that real estate companies had too much debt and made a rule called the 3 red lines. These were the strict rules that builders had to follow if they wanted to borrow more money. The rules were pretty easy to understand. 1. Their debts couldn't be more than 70% of what they owned. 2. Their net debt couldn't be more than their wealth. 3. The cash they had on hand had to cover all of their short-term bills. Everything looked good, but there was a big catch. By 2021, almost half of the real estate companies in China were breaking at least one of these rules. This made it so that these businesses couldn't raise more money at the worst possible time when they needed it the most, especially since old debts were coming due. There was a lot of stress in the real estate market, and it got a lot of attention from the media, especially after the Evergrande Group, a giant in the business, went bankrupt. Investors lost a lot of faith in China's real estate market because of the debt problem, which slowed it down a lot and caused prices and sales to drop. But here's the catch. About 70% of Chinese people's income is locked up in real estate. This means that any slowdown in this sector can have a bigger effect on the economy as a whole. People started spending less because they were worried about the future. This was on top of other problems like the slow return from COVID-19. In turn, this hurt businesses, which had to lay off workers to save money and make less money as stock prices fell. People became even more careful with their money because of all of this, which led to a downward slide. This is pretty much what has been going on in China for the past year. What's going on in China now? Things don't look good, especially when it comes to their real estate market. Things have been getting worse, and it looks like things are going to get very bad. To begin, the prices of brand new homes have been going down for a year straight. Last month was the worst month for price drops in almost 10 years. Prices of homes have gone down in 67 of China's 70 biggest cities year over year, the biggest drop since 2015. Not only are new homes losing value, but also used houses, those that aren't brand new, are losing value very quickly. Prices for these homes have dropped 7.5% since this time last year, and they dropped another 1% just in May. That is the biggest drop since China began collecting data in this way in 2011. Even worse, purchases in real estate have dropped by 10.1% from January to May of this year, compared to the same time last year. The only time this drop was bigger was in the early days of the COVID-19 pandemic. The Chinese government has been trying to help the real estate market, which is having a hard time. They have made it possible for local governments to buy homes at fair prices, which has made housing more cheap. Another thing they've done to try to get more people to buy is lower the down payment and interest rates on home loans. Even though these attempts are being made, things don't seem to be getting better so far. Investors are still not sure what to do. Bloomberg said that developers are still having a hard time getting loans, even though the government made a white list of real estate companies that can get loans last year. The total amount of money that developers have access to, such as loans, shares, and money from selling homes, has continued to drop, dropping a huge 24.3% from the previous year. To put it simply, China's real estate market is in a bad spot, and things aren't getting better quickly, even though the government is trying. When will things get better for the Chinese economy? Things aren't going well right now. Unfortunately, the Chinese real estate market is not looking very good right now, which is having an impact on the whole Chinese economy. People in China are seeing their wealth shrink as house prices go down, which doesn't help the situation. That, along with the slow rebound of the economy after the COVID lockdowns, has caused many people to tighten their belts and spend less, which is bad for the economy as a whole. Let's look at what happened in the U.S. during the pandemic to better understand this. The U.S. printed trillions of dollars in stimulus money to help people get through tough lockdown times. China, on the other hand, chose not to do large-scale stimulus. They were not at all the same. People in the U.S. spent a lot more because they had extra money, which caused inflation but kept the economy going strong. Because people had extra cash, they spent it, which grew the business. But in China, where there were no huge cash gifts, the opposite happened. They haven't had inflation, but deflation, which means that the prices of things and services are going down. It's because people have less money to spend and save more. The People's Bank of China recently polled 20,000 families and found that in the first quarter of this year, more people were saving money than spending it or investing it. Chinese company stock prices have changed a lot because of this change in behavior. Businesses are having a hard time because people are spending less and less money, which is lowering the value of their stocks. The Chinese economy is having a hard time right now because the real estate market is struggling. There aren't any big stimulus measures in place, and people are being careful with their spending. The CSI 300 index, which tracks the biggest stocks on mainland China's stock markets, has been having a hard time since the middle of 2021. It's been bad for the share prices of big names like Alibaba, Tencent, JD.com, and Baidu, especially those that depend on people spending money like Alibaba and JD.com. But is there a chance that things will get better? It's true. There are some signs that things may be getting better, even though there's still a long way to go. To begin, the decline that started earlier this year has turned into very little inflation, which is a good sign. It means that prices aren't going down any further and that the business is getting back to normal. Another good thing is that spending by consumers seems to be going up. China's retail sales rose 3.7% in May compared to the same month last year. This was higher than the 3% rise that experts had predicted. China's National Bureau of Statistics said that retail sales of consumer goods reached 3.92 trillion yuan, which is about $540 billion USD. Sales went up 3.7% in cities and 4.1% in rural areas. Not only are people spending more at home, but China's exports also grew by 7.6% year-over-year in May, which was more than the 6% increase that Reuters had predicted. Even though these are good signs, the Chinese economy still has a long way to go. The steps the Chinese government, CCP, takes to improve the economy will be very important. Some steps have been taken, like letting local governments buy property and lowering interest rates, but a lot of experts think these aren't enough to really boost demand and get the economy back on the track. It's likely that how quickly, or if there is a full recovery, will depend on how aggressively the CCP moves in. They say over and over that they want raise domestic demand and consumption, but it looks like they're not doing anything that would make that happen. It's possible that interest rates will go down and that rules will be loosened in the housing market, which is having a hard time and could go down for years. Also, new loans could be taken out to pay for building projects. Actually, what should really happen is that the government should give people cash so they can spend it. We might not see that anytime soon, which is a shame. Let's hope that China can change these bad economic trends. China is very important to the world economy, even though the media often reports bad things about it. They buy a lot of things from other countries and make a lot of things that we all need. Let's agree with people like Charlie Munger that we shouldn't try to fight China, but instead should try to get along with them. This may sound strange. If everyone worked together, the world would be a better place. Anyway, that's the most recent news about China's economy, which is still mostly affected by its ongoing property problem.